outlook. We have a lot of questions here. Can we start with the first question by Alexander? The US market is correcting heavily. Will there be rotation of the fund flows to the emerging markets such as the Philippines?
Yeah, sure. I think that's kind of one of our central outlooks for the year. We do expect more sort of rotation towards Asia Pacific, but I think the key sort of conviction we have at the moment really is China. Right, I think because at the end of the day, a lot of the earnings there are still quite solid, and I think the derating is much more significant than I think than what it should be. So I think we have a pretty positive view on China, especially given the fact that if you are focusing on the right stocks in the right sector, you can still deliver very, very strong earnings. ASEAN, I mean, I probably won't comment on Philippines as a specific country, but I think ASEAN in general is still a little bit challenged. I think obviously we are unfortunately still not firing in all cylinders. I think in broad markets, I think vaccination rates are not as fast as I think in other parts of Asia Pacific. So we do think there is tremendous value to invest in ASEAN, but I think at the moment, we need the macro to come back. I think we've, on a broad basis last year, I think just not specific just to Philippines, ASEAN or Asia Pacific, the recovery in earnings has really been driven primarily by sort of exports. Right? What we really need in ASEAN, and really if anybody invests in ASEAN, the one thing you need is consumption. Right? We need consumption to come back. Right, and to do that, you need mobility, you need flexibility, you need people to be able to go around, travel, all these things.
You need the opening.
We need things to open up, basically. So once that happens, then we'll be a bit more constructive. But at the moment,
so Anis, if things open up, you will like this already.
Well, it depends. And again, we wouldn't buy the market; we will buy stocks, specific stocks. Yeah.
Okay. Next, we have a lot of questions, so let's go through them again. Next group of questions. Regarding the Fed tapering and the spike in inflation. Question by Abel. With the Fed's hawkish stance, can emerging markets weather the storm, especially those coming from a low base, such as like the Philippines? Related question. Anis?
Can emerging markets weather the storm? Yes, I think broad base, yes. I think it depends what specifically within an emerging market. I think if we're talking about emerging market equities, I think yes, we can, primarily because we are, again, base everything back to earnings, right? As long as the earnings continues to recover or at least sort of grow, or the momentum is slowing down. So I think we'll need to sort of keep an eye on that. So I think more likely, yes. If we're talking about fixed income, especially dollar fixed income, that's going to be a little bit challenging because the duration isn't pegged on sort of local rates, it's pegged on dollar rates. So that's going to be a little bit challenging. Yeah.
Okay. So equities better than fixed income. All right. Thanks. Next. Let's go through it very quickly. Portfolio allocation question by Aaron Paul. With everything that's going on in the global stage, what instruments would provide a lower risk of losing our capital? Any recommendation there?
Very difficult to answer this question without actually seeing what you're invested in, your horizon, and basically all the other details. But in general, I would say diversification is your friend. Right now, obviously, there is significant volatility as you're seeing in sort of markets in January, right? So I think having a diversified portfolio, not just sort of different types of equities, but different styles of equities. Because I know a lot of people have been invested in thematic equities for the last couple of years. Having a bit more sort of like core style, having a bit more defensiveness, adding a bit of value, I think that's going to be interesting from a style perspective. And again, not to say that fixed income isn't completely bad. There is a role that fixed income can play in portfolios, primarily in diversification, right? So not having fixed income is going to be key. And at the end of the day, if you have access to derivatives, specifically if you're a fixed income investor to hedge out your duration, that's going to be a kind of a must-have, I think, in 2022.
Okay. But you're talking about equities. Equities, not fixed income, right?
Well, I mentioned both just right now, yeah. But yeah.
Okay. Another question by Ray. Where do you see the best equity performance for 2020 in the region and developed markets to participate in? And what is your advice on allocation? Wow, they're really asking for this.
Well, we do have a very positive view on Asia, specifically China. I think our expected return frameworks are signaling somewhere north of sort of 20% if you're looking at sort of all China. Right. So which is, and this is just sort of broad market. I think obviously specific stocks can do better than that. So naturally we are stock pickers, not sort of beta allocators. So we do typically like to buy specific stocks within the region. In developed markets, I would say at the moment, Europe provides some really interesting opportunities, given that obviously it is expensive, but not as expensive as America. But that being said, the recent correction in sort of like large cap US tech is getting us a little bit interested.
So more weight on China and Europe rather than the other markets. Okay, thanks. Next, do we have more questions on the global front? stocks and industry picks. You're a stock picker, so this is a question by Teara. With all the emerging global crisis, which industries prove to be resilient? What stocks, what industries can you look at, Anis?
Yeah, so I won't be able to comment on specific stocks, but I think in general, obviously what we've seen is sort of some really interesting things play out. Again, it really depends on the region you're looking at. If we're talking closer to home, obviously a lot of the exporters in Asia did quite well last year. A lot of the tech hardware names did very, very well last year as well. If you're leaning into sort of like what we're thinking about in 2022, I think consumption play is going to be really important if you're an Asian investor, especially sort of names around sort of staples playing on the idea of premiumization. I think this is going to be an interesting place to play. Obviously, anything around sustainability is good. Anything around solar is getting us rather interested. The EV supply chain itself was a really big performer last year. And I think obviously everyone's sort of moving to the decarbonized world. So anything along the decarbonization theme is quite important. But again, these did quite well last year. And actually we've been trimming on the back of that and looking a little bit more into like OEMs within sort of the EV car space.
Okay. Now, by Alvin Jovi, I know you cannot say what stocks, but maybe what about the high dividend paying ones? Are they interesting?
So I think this as a style is one of our sort of recommendations for clients this year, right? Because I think we are very conscious looking at flows, not just regionally, but globally. Investors have been sort of preferring a growth style and sort of thematic style over the last couple of years. So we would recommend investors sort of diversify that allocation out of that of very sort of style concentrated portfolios, looking at more dividends/value investing. Within dividend value investing, there are two regions that pop to mind that obviously provide decent yields. There really is no sort of dividend yield in the US. You're looking at something to the range of 2%. But investors who have the flexibility to invest in European dividend stocks or Asian dividend stocks, you're pushing that sort of 4 or 5% dividend yield range. And that for us looks pretty decent for this year. And again, a lot of these dividends are tied to earnings growth. So if we do still expect earnings growth this year, this should translate quite nicely to dividend growth as well.
Great. Thank you very much. Thank you very much, Anis.